love the channel and find it useful in becoming a happy retiree. Subscribe today. Phil joins us on the line from Marietta. Phil, good morning. Welcome to Money Matters. What's going on? How can I help?
Good morning, Wes. I missed the first part of your show. I don't know if you addressed it or not, but I'm interested in your opinion on the market decline this past week. It seems like it started out with the announcement from Amazon and Berkshire and Goldman Sachs about starting their own insurance company. But it seemed like it just continued to go down even after that news. So I'm just wondering if you think that this is a temporary thing or if we're in for a long-term bull market.
Well, I think that, yeah, Phil, I think it's an important question that we're all probably wondering here on a Sunday after the Dow dropped almost 1,100 points in the week, 665 points on Friday. And I think a couple of thoughts here, and I haven't gotten to this yet, but since you're calling about it, we've gotten into an environment where good news now is actually, to some extent, bad news. And we had great economic news throughout the week. Consumer confidence is strong. Employment is strong. Wages are starting to go up. And that starts to get the market worried because that means, hey, maybe we're getting closer to the end of the economic cycle. So I'm not going to even call it a shock, but the market finally woke up. We've had the unprecedented low volatility. Now we're rapidly getting back to more normal volatility. Volatility index spiked this week. Dow dropped almost 1,100 points, down 4%. S&P down 3.85%. So wait a minute, all of a sudden, someone threw a stone into a very, very calm lake. And there's ripple effects, and that's just starting. And Phil was just on the line and said, hey, Wes, how nervous should we be about this? Is it the start of something bigger? Is this the end of the rope? And I think that's what everybody worries about every time we go into some sort of correction mode. And I think part of this is that, and part of the reasoning, and I think this is a very important piece of this, is that the economic news that we continue to get, it's really still solid news. And in the short run, that's actually bad news for the market. So economic good news has started to turn into bad news for stocks. Part of the market angst can be traced back to the extraordinary strength of this red-hot economy. Well, maybe red-hot is not the right way to describe it. Maybe I should say a warm economy that is starting to hit a temperature better described as hot. So we're moving from warm to starting to get to the point where it might be hot, call it hot, or maybe start to bubble over a little bit. Remember, unemployment is already down to 4.1%. We just had a jobs report. The wages are starting to climb. We've always said that when inflation or wage inflation gets to 4%, we start to get into a very likely scenario where we end up in recession. Wages did move higher on Friday's jobs report. Big part of the sell-off, big part of the catalyst of why we sold off. It clipped in at a rate of about 2.9%. That piece of the economic equation, that's good news for workers. It's good news for you and me. Our wages are going up. But it can also foreshadow the end of the economic cycle, the end of the expansion. But not immediately. It doesn't happen right away. And we're just getting closer to the end of this expansion. So we're at 2.9% of wage inflation. The danger zone is 4%. That could happen over the course of the next 6 months. Could take 2 more years. But it makes the market nervous that we're getting closer to the end of the economic cycle. So I don't believe that we're going to just tip over into recession over the next month. We're just not there yet. There's too much economic good news coming. Tax reform is just starting to kick in. But from a market perspective that needs to take some breathing room, some consolidation, wake back up and be a more normal, volatile market, that's where we are right now. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.